Assalamualaikum warahmatullahi wabarakatuh, and good morning to Madam Siti, Fatimah, Noor, binti Minhad. Today, our group will present our group project 1, FAR610. But first, let me introduce my group members. My group members consist of me, Muhamad Shukur bin Nasharuddin, Nadhrah binti Ahmad Saufi, Nurul Izzatun Nisa binti Muhamad Kamal, and lastly, Batrisya Raihana binti Sulaiman. Question 1. Alur Berhad has been in a business selling high-quality furniture for kitchen, living room and bedroom in Melaka. On 1st July 2016, Alur Berhad made 100% investment in Gajah Berhad and Landu Berhad. Since Alur Berhad made 100% investment, this means that there is no NCI for Gajah Berhad and Landu Berhad. The consideration transfer paid were equal to the fair value of net asset of Gajah Berhad and Landu Berhad. After that, on 1st July 2019, Alur Berhad acknowledging that Kelemak Berhad may pose threat to them. So, Alur Berhad acquired 16% of ordinary share of Kelemak Berhad at a market price of RM2 each. The total consideration comprises of 19% cash and the remaining 10% in form of Alur Berhad 6% preference share. However, only cash transaction has been recorded. So to get 6% preference share, firstly, RM74 million investment in Kelemak Berhad at statement of financial position need to less with RM20 million cash further acquire equal to RM54 million. After that, we need to find actual cash, which is RM50 million multiply 16% multiply RM2 market price equal to RM16 million. Lastly, to get 6% preference share is RM60 million less with RM54 million equal to RM6 million. On the acquisition date, the total fair value of net asset of Kelemak Berhad was RM88 million, and included in this amount was fair value adjustment of Kelemak Berhad non-depreciable land. This adjustment, however, has not been recorded, means that we need to find fair value for land. Then, on 1 January 2020, Alur Berhad decided to further acquire 20% of ordinary share in Kelemak Berhad for 20 million cash. On the same day, Alur Berhad acquired 30% of ordinary share of Melaka Berhad at RM50 million. Acquire 13% of ordinary share means that Alur Berhad acquire associate. Question A. Compute goodwill or bargain purchase on acquisition of Kelemak Berhad. To get goodwill or bargain purchase on acquisition of Kelemak Berhad is consideration transfer RM60 million will add with RM35 million NCI, which is we can get from additional info number 6, and then less with RM88 million fair value net asset on 1st July 2019 equal to RM6.3 million goodwill. Fair value of land is balancing figure, which is RM88 million fair value net asset less RM50 million ordinary share less with RM22 million return profit and less RM8 million other reserve. Question B. Calculate gain or loss arising from second acquisition of share in Kelemak Berhad. To get gain or loss from second acquisition is RM20 million consideration transfer less RM89.5 million total fair value net asset on 1st January 2020 with a portion of 20 million which is RM70.9 million. So, from the a portion of 20% which is RM17.9 million, we will less with RM20 million consideration transfer. Therefore, we will get RM2.9 million. To know whether RM2.9 million is loss or gain on the second acquisition is we need to compare between cash company paid to invest with fair value net asset with a portion of 20%. Since cash company paid to invest in new acquisition is more than fair value net asset with a portion of 20 million, it means that company gain loss from second acquisition. Question C. Determine carry amount of investment in Melekat Berhad. To get carry amount of investment in Melekat Berhad is Rm 50 million cost of investment add with Rm 1 million post acquisition reserve with a portion of 30 million, which is Rm 0.3 million will equal to Rm 15.3 million carry amount of investment in Melekat Berhad. To get Rm 1 million post-acquisition reserve is profit less unrealized profit of land. Since Alor Berhad acquired associate on 1st January 2020, which is acquired happened during the year, so profit Rm 4 million need to apportion by seed over 12 months and will get Rm 2 million. Then Rm 2 million profit will less with Rm 1 million unrealized profit of land, which is get from additional info number 3 and will equal to Rm 1 million.
Next, I will explain the schedule. NCI on acquisition of Kelamat Berhad 35 million. NCI on acquisition of Gajah Berhad nil. NCI on acquisition of Lendu Berhad nil. Impairment Kelamat 0.7 million with operation for group rating profit and NCI. For group rating profit, we got 0.42 million and for NCI 0.28 million. Preference share due to NCI 15 million. Decrease in NCI 70.9 million. Next, calculate return profit in Alor Berhad is 2 to 2.6 million. And then return profit of Gajah Berhad we calculate and got post adjusted 96 million. Then we calculate return profit in Lendu Berhad. We got the post adjusted 49.1 million. Lastly, we calculate return profit of Kelamat Berhad. When we calculate, got post adjusted 3 million and then we apportion it from July until December. For group return profit 0.9 million and 0.6 million for NCI. For Jan until June, 1.2 million for group return profit and 0.3 million for NCI. Lastly, total amount we got for group return profit is 396.38 million. Total amount for NCI is 97.72 million. Next, E. Consolidated statement of profit or loss and other comprehensive income for the year ended 30 June 2020. First, revenue 160 million, less cost of sale 47 million, got gross profit 113 million, gain on disposal 1 million, plus investment income 9.76 million, less expenses 60.6 million, less impairment of goodwill 0.7 million, and plus share of profit associate 0.3 million. Get profit before tax 62.76 million and then less taxation 80.3 million. We got profit after tax of 4.46 million. Then we calculate profit after tax attributable to parent and NCI. Parent amount is balancing figure, so we must calculate NCI first, as stated at working 1. We got the amount for NCI is 3.78 million. So for 4.46 million minus NCI 3.78, we got parent amount 40.68 million. Okay, that's all for E. Next, F. Consolidated statement of changes in equity for the year ended 30 June 2020. First, we calculate group rating profit. Balance brought forward, we got from working to 338.5 million. Then less loss on second acquisition 2.1 million. Plus profit for the year 40.68 million. And then less dividend 7.7 million. Good balance carried down for group return profit 369.38. Next, we calculate the NCI amount. First, let's decrease in NCI 17.9 million plus profit of the year 3.78 million, less dividend 0.60 million, plus acquisition of subsidiary during the year 35 million, less preference share dividend 3 million, and we got balance carried down for NCI is 17.72 million. Lastly, consolidated statement of financial position as at 30 June 2020. First, we calculate the asset. Property, plant and equipment 555.5 million plus other investment 281 million plus intangible asset 77 million, trade receivable 41 million, other current asset 60 million plus investment of associate 50.3 million plus goodwill 6.3 and the total asset 1036.1 million. Next, we calculate the equity. The ordinary share is 400 million, 6% preference share 6 million, group retail profit as at the schedule 369.38 million, group other reserve is 30 plus 20 plus 14 plus 8 minus 8, we got 64 million. Non-controlling interest as at the schedule is 67.72 million. Then liabilities. Long-term loan 84 million, current liabilities is 45 million, and we got the total liabilities and equity is 1036.1 million. That's all for G. Thank you.
In our opinion, we are not agree with Encik Ahmad's idea that the investment in TJ Berhad should apply the acquisition method and the financial statements of TJ Berhad should be consolidated with Usaha Maju Berhad in accordance with FAR610 Consolidated Financial Statements. FAR6 requires that an entity shall account for each business combination by applying the acquisition method. Applying the acquisition method requires identifying the acquirer, determining the acquisition date, recognizing and measuring the identifiable asset acquired, the liability assumed, any non-controlling interest in the acquiree, and recognizing and measuring goodwill or a gain from a bargain purchase. FAR6 defines a business combination as a transaction or other event in which an acquirer obtains control of one or more businesses. An acquirer might obtain control of an acquiree in a variety of ways, for example, by transferring cash equivalent or other, including the asset that constitute a business, by incurring liabilities, by issuing equity interest, by providing more than one type consideration, or without transferring consideration, including by contract alone. Usaha Maju Berhad, Izzat Berhad and Berkat Berhad get in contractual agreement which bounds them into joint control over TJ Berhad in order to complete the project as scheduled. Joint control is a contractually agreed sharing of control of an arrangement which exists only when decisions about the relevant activities require unanimous consent of the parties sharing control. In this case, joint control exists where the parties contractually agree to share control and decisions related to the relevant business activities of TJ Berhad, and TJ Berhad should have unanimous consent of all the companies sharing the control. Usaha Maju Berhad cannot apply the acquisition method because joint control of an arrangement can prevent any of the other parties or a group of parties from controlling the arrangements. So in this case, since the Usaha Maju Berhad cannot control over TJ Berhad, even it is the highest investor in TJ Berhad, which is 40%, Usaha Maju Berhad has to use equity method under FAR610 investment in associates and joint ventures. FAR610 defines an associate as an entity over which the investor has significant influence. Investor has significant influence over the investee if holds directly or indirectly 20% or more of the voting power. In this case, Usaha Maju Berhad holds directly 40% voting power in TJ Berhad. An entity with joint venture or significant influence over an investee shall account for its investment in an associate or joint venture using the equity method. Under the equity method, on initial recognition, the investment in an associate or a joint venture is recognized at cost, and the carrying amount is increased or decreased to recognize the investor's share of the profit or loss of the investee after the date of acquisition. The investor's share of the investee's profit or loss is recognized in the investor's profit or loss.
Question 3A. Calculate the gain or loss on the disposal of the share for the Highland Berhad. To calculate gain or loss on the disposal of share for Highland Berhad is, first, we need to calculate for the goodwill. To calculate goodwill is RM 100 million consideration transfer at RM 22.8 million NCI will equal to RM 122.8 million. From the total RM 122.8 million, we will left with fair value net asset of TUA on 2014, which is consists of RM 40 million ordinary share, RM 42 million return profit, RM 12 million general reserve, and RM 20 million fair value of land. So finally, we will get goodwill RM 8.8 million. For the second step is, we will calculate gain or loss on the disposal. To calculate gain or loss on the disposal, we have two parts. First part, we will calculate gain or loss on the disposal of book of holding, and second part is we will calculate gain or loss on disposal for consolidated. To calculate gain or loss on disposal for book of holding is RM 160 million will less with RM 90 million carry amount of investment, and we will get gain on disposal RM 70 million. Then, for the second part, which is to calculate gain or loss on disposal for consolidated, is RM 160 million proceed, add with RM 6.4 million fair value of remaining investment will equal to RM 166.4 million. To get RM 6.4 million fair value of remaining investment is 8% multiply 40 million unit of issue ordinary share multiply with RM 2 ringgit market price. From the total RM 66.4 million, we will less with RM 96 million fair value net asset of TUA Berhad on 1st July 2018 with a portion of 18 million and will equal to RM 70.4 million. To get RM 96 million fair value net asset of TUA Berhad on 1st July 2018 with a portion of 18 million is RM 40 million ordinary share at RM 18 million return profit multiply with 18%. Since Highland Berhad dispose mostly interest, deal with cost holding lost control over subsidiary. So Highland Berhad shall written off all the unpaid goodwill against the gain or loss on disposal, which is RM 70.4 million less RM 8.8 million goodwill remaining will equal to RM 61.6 million.
In 2014, Highland Berhad acquired 32 million units out of 40 million units of issued ordinary shares of RM1 each in TUA Berhad at a cost of RM 100 million. This led to Highland Berhad and TUA Berhad has parent and subsidiary relationship, as Highland Berhad has controlling interest over TUA Berhad of more than 50%, which is 80%. However, on 1st July 2018, Highland Berhad has sold 90% of its holding in TUA Berhad for RM 160 million. This resulting Highland Berhad has no more controlling interest over TUA Berhad because Highland Berhad now only holds 8% in interest in TUA Berhad, which is 80% minus 90% times with 80%. There is a decrease in shareholding, and in this situation, Highland Berhad retains some interest in TUA Berhad, but neither controls nor influences in TUA Berhad. This means the disposal mostly interest will cause holding lost control over subsidiary. Therefore, after the disposal, the relationship between Highland Berhad and TUA Berhad can no longer be parent and subsidiary, as TUA Berhad is ceased to be subsidiary and become simple investment to Highland Berhad instead. In the group's financial statement as at 30th June 2019, Highland Berhad should return all the unimpaired goodwill against the gain or loss on disposal, which is RM 8.8 million. The fair value of remaining investment RM 6.4, which is 3.2 times RM 2, is shown at carrying value as an asset and no consolidation.
On 1st January 2019, Seroja Berhad has significant influence over the Seroja Berhad FAR610 defined associates as an entity over which the investor has significant influence. As investor is presumed to have significant influence over the investee if the investor holds directly or indirectly 20% or more of voting power of the investee. On 1st January 2019, Kencana Berhad acquired 10 million ordinary share in Seroja Berhad. The issued share capital of Seroja Berhad companies 20 million ordinary share of RM 1 ringgit each. This means that Kencana Berhad was held directly 40% of the voting power of the Seroja Berhad. Significant influence is evidenced by participation in the financial and operating policy decision of the investee but not control of those policy. An investor may exercise significant influence in several ways, usually by representation on the board of directors, by participation in policy-making processes, material intercompany transaction, interchange of managerial personnel, or dependency on technical information. In the case of Kencana Berhad and Seroja Berhad, Kencana Berhad as an investor may exercise significant influence to the Seroja Berhad in the ways by right to appoint and the right to remove and set the remuneration of management responsible for directing the relevant activities.